We've got Thomas Hayes, Great Hill Capital Chairman and Managing Member here. So as we think about the SLR, of course, as we're hearing from Fed Chair Jay Powell, who was commenting on it during his 2-day stint on Capitol Hill, both discussing with the House Financial Services Committee and then additionally with the Senate yesterday here, this question came up. The SLR was supposed to act as a backstop to risk-based capital requirements. Too often, the SLR acts as a binding requirement for U.S. banks. They went on to ask, would you agree that adjusting the SLR would free up capital for banks to invest more in treasury markets and other low-risk assets that would be beneficial to families and businesses across the country? And on net, he agreed.
Yeah.
So what is the significance of that? What should banks expect from this point forward?
Yeah. This is the biggest news of the summer, okay, and maybe of 2025. Effectively, what it's going to do is enable banks to own a ton of treasuries. They're not going to have to post capital against it. So they can do that. They can get the yield. And banks' preference, they tend to buy on the short end of the curve. So in terms of mortgage rates, how does that really help? And that's the argument people make. Well, what's the difference if Powell cuts because the 10-year yield dictates the mortgage rates? What happens is they can issue short-term and do an operation twist like they did in 2012. Besson can do it at the Treasury and buy in the longer end of the curve, which could bring down the 10-year yield by 30 to 70 basis points. If that happens, you could see a 30-year fixed rate mortgage by the end of this year in the high fives, below 6%. Once that happens, the demand for housing is going to be off the charts because basically Powell has delayed the dreams of 72 million millennials by artificially holding rates 200 basis points above inflation, highly restrictive, and you see the average age of a new home purchase has gone up so much since Powell has been.
It's 38 now.
It's 38, and that becomes late to start a family. It becomes late to have kids. So a whole generation has been hurt by wrong-minded policy. And if and when Trump announces a shadow Fed chair, Powell immediately becomes a lame duck for the rest of his term because the market will start to price in. Let's just say it's Kevin Hassett.
Sure.
Very dovish. The market will begin to price in 200 basis points of cuts in 2026 immediately. Powell will have zero power from that point forward. So when he says the end of September, he's basically saying, time to move, or I'm going to go with this. You got to move in July, or you got to move in September, or I'm announcing the shadow Fed, and you're effectively out, even if you want to stay in the chair for 6 more months.
That's really interesting.